right, folks. Well, good afternoon. Renee's voice was a little low. I think her mic might have lowered, folks. So I'll cover just a little bit of what Renee was talking about. But thanks, Renee. I appreciate it. Welcome aboard, Top Gun Options. I'm going to give you a quick brief here about who I am. Let me grab the right slot here, and I'll just cover quickly what Renee hit. And then we got to talk about trading, what's going on in the markets, because trading is a form of combat, folks. My name is Matthew Buckley. My call sign is Whiz, and no, my parents didn't hate me. That wasn't my God-given name. I earned that. It's called a call sign, just like Iceman, Maverick, all that stuff. Flying fighter jets for the United States Navy off of aircraft carriers Abraham Lincoln and Kitty Hawk in the Persian Gulf. 44 combat sorties, and graduated from the Navy Fighter Weapons School. The hell does this have to do with investing, Whiz? That's interesting and neat. I'd love to talk to you over beer about it, but what's it have to do with me making money? Absolutely everything. When I was growing up, I grew up kind of a lower middle class kid, one of 6 kids in New Jersey, South Jersey, outside of Philadelphia. And every morning I see my dad reading the paper, and this one really interesting page always caught my eye. And I'd ask him what it was. He said, well, these are stocks. Obviously, this was before Al Gore invented the internet, and he just kind of taught me a little bit about that. I'm like, well wait a minute, Dad, I could make money when I go to McDonald's. I could help make money for me owning some of that company. Yep. Short story long, folks. As soon as I got out of college and went to flight school for the Navy, I started becoming interested in investing. Buying mutual funds, buying Ann Taylor and American Express due to a significant other's spending habits. And then I found out about options, and 25 years later, here I am. It's just been an absolutely incredible ride. In addition to trading, which I'll tell you about in my background in trading, I also speak around the country and around the globe. And as Renee said, I wrote a book. Everything I'm going to teach you about trading with my military methodologies, I go out and apply to the business world. Look at some of the companies on the screen. I have given speeches. I've met the CEOs. I've met frontline salespeople or technologists or biotechnologists in all of these companies. I've worked, I'd say, over the past 15 years with over 300 companies, including most of the Fortune 500. Okay, Wiz, again, what does this have to do with trading? Everything. Look at those names. McKesson, Gilead, Cargill, Fidelity. Now, as a fiduciary to these companies, when I work with a company, I can't tell you what's going on in the company, how they're doing financially. I'm not allowed to trade in these names. But guess what it provides me? Something called situational awareness. I know what's going on well before you see it on Comedy Central, which is what I call CNBC. It's a complete joke. So I know before even analysts know what's going on out there in the market. Again, one more time, I don't trade in these names. I can't, and I won't give you any information about what's going on inside a particular company. But there's no other trader on the face of this planet that has the access that I do to the heavies, the C-level executives in these industries. Okay? Now, and yes, I'm an Eagles fan. This methodology that you're going to learn today worked so well that I popped up on the radar. Me, little old retail trader Whiz, doing just what I need to do to make money, and thinking I'm kind of doing okay. Well, the largest volatility arbitrage firm in the world. You see these big vertical windows? This is the Chicago Board of Trade. This firm right here is called Peak 6 Investments. I got brought on board Peak 6 Investments to be their managing director of strategy, which is just absolutely incredible. I'm trading my normal trades, and all of a sudden I go from being little old me to running a $2.5 billion volatility arbitrage fund, building Options House, which many of you know is a retail brokerage, and then being the founder and CEO of the Options News Network. This is all serious, folks. Everything I learned in the Navy, I applied to my trading, had incredible gains, and you're going to see the gains that my company has right now with basic methodologies. If anybody tells you you need software to trade, you're being lied to. All you need is the 7 inches of gray matter between your ears and a brokerage platform, and I'm going to teach you. My most important job, though, folks, is the proud father of a great squadron of three young kids. Let's get airborne. Enough about me, enough about everything else. How are our model portfolios doing here at Top Gun Options? Well, let's take a look at how the average hedge fund is doing year to date. A lot of people think that, oh, I wish I was in a hedge fund. No, you don't. 2.67%. I can find that in my couch. The best year hedge funds have had was 2013, 11%. How's this fit you nice? Year-to-date gain for the primary live trade brief portfolio I'm going to show you right now, and I'm going to put take a look at a trade I'm going to place Monday morning. 93.7% return on risk. What does return on risk mean? The model portfolios of Top Gun Options you're going to see in a second are based on $100,000 accounts. Whiz, I don't have $100,000. A lot of people don't. We have folks that trade with $1,000. We have I've clients that are multi-billionaires. You change your contract size based on your risk, and I'll show you that in the live trade here in a second. But in these $100,000 model portfolios, at any given moment, I'm only using about half. I don't use, if you push all your chips in, if you have a $100,000 portfolio and every penny of it is invested, you deserve every bad thing that's going to happen to you. I'm only using about 45 to 50 grand in the model portfolios. So the rest of that cash isn't at risk. So that's what return on risk means. The other portfolio you're going to get access to, weekly options and urgent alert. We, for the, knock on wood, for the past month and a half, we haven't had a that would suck, a losing weekly options trade. We've made about $25,000 in our weekly options portfolio in the past month and a half. And we'll talk about that here in a little bit. And finally, I'm embarrassed to say this. You ready, folks? This is my worst portfolio, our retirement portfolio. It's only up 43% year to date. What is that? $56,000. This is the conservative portfolio, and it's up 43%. Okay? How do we do it? Here's our methodology, folks. It's not rocket surgery. SOT, strategic, operational, tactical. Out of the hundreds and hundreds of folks on this webinar today, I'd say 98% of you are very tactical traders, meaning you wake up, you put on your bunny slippers, sip a coffee, you put on CNBC, which is a complete joke, and hey, this guy is talking about Tesla. I think they make cars. I don't know, but he's a good-looking guy, great hairdo, good-looking suit. I'm going to get long Tesla. And a week later, you're broke because of forces that you didn't know about. It's awful. Here's what we're going to do here. We're going to teach you to do the exact opposite. Today, I'm going to give you a quick strategic brief, meaning 50,000 feet. How many times have you woke up when you thought everything was great the day before in the market, and the futures are down 100 points? China, reported worse GDP numbers, or something happened in Russia, or Mario Draghi said something in Europe. You have got to know what's going on around the globe. Oil. Yeah, you need to care what the price of oil is and what's going on. Here's what Iran said the other day. Here's what OPEC is saying about a potential price cut. Does everybody remember January and February, what the market did and what caused it? It was oil. So you have to know all of those things. And then the one level down is operational. So after a 15-minute brief in my live trade briefs each week, at the strategic level, I get operational. And you can guess what operational means. It means the U.S. What happened at Jackson Hole? What's going on with the Fed? When are they raising interest rates? How are earnings looking? When is the next jobs report? How are core durable goods looking? Consumer spending? Boom, 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 boom. We peel the onion back one layer. And then, ladies and gentlemen, then we can get tactical. And that means trading. We can start looking at what potential trades to put on based on our strategic and operational mindset. Folks, many of you feel like you just got airdropped into Afghanistan with a rifle and somebody pointed, march in that direction, kill bad guys. That's how you trade. That ain't me. Before you even got in that airplane to get paradropped in there, we knocked out a brief. Strategically, here's what's going on. Operationally, here's what's going on in the area. Tactically, here's your mission objective, Whiz. Go. Do me a favor, because I don't have time to go through this. Each step, I'm going to do it right now with a trade, but take a screenshot of this. I think up in the top of your viewing window there's a little camera looking thing. Take a screenshot of this, because I don't know how many times in 26 years retail traders have said to me, I always hear some guy on this webinar, or I went to to the airport Marriott to watch some guy in a really bad suit give me a speech about options. but they all say you have to have a trade plan, and then they all walk off the stage. Here's your trade plan. It's come from combat, and it's been in Chicago in the Board of Trade and grown a company from 150 to $2.5 billion. Step one, strategic mindset. Now, don't worry, I'm going to go through this, like I said in a minute, live in the market. Step two is identifying your target, what you're going to trade. Step three is commit criteria. Why am I committing capital to this trade? 3 to 5 sentences. Think of it as a, if you've ever been in sales, what's it called? The elevator pitch, right? If we get it on the elevator together on the 20th floor, by the time we hit the lobby, I better be sold on why you're in this Apple trade. If you don't have solid commit criteria, folks, why are you in the trade? I have coaching students who join TGO, and I take a look at their portfolio. I'm like, that trade right there, why are you in it? Go. I like Apple. That's the dumbest thing I've ever heard. Okay, I have an iPhone. Now you're making me even dumber. Why are you committing capital to this trade? Step 4 is the tactic. There is no such thing as an option strategy, folks. Now, half of you probably just said, okay, Whiz, now you're completely gone. And I love doing iron condors. It's a great strategy. Your terminology is completely wrong, period. A strategy is saving for college, saving for retirement, short-term income generation, buying a boat in 6 months, going skiing in Vail. Those are strategies, folks. A tactic is an iron condor, a bull put spread, a call spread. A tactic gets you to your strategy. Don't ever say option strategy again because you sound foolish. I will pat myself on the back for that. I changed the terminology in a 4-block radius of the Board of Trade. It's funny when I go play secret shopper on webinars to hear other traders with no military background call them options tactics now. That was me. Tactical employment. What am I going to do with this trade once it's airborne and flying downrange? What type of mid-course guidance? What if the trade starts going against me? What if it starts going for me? This is where the emotion gets taken out. Look at the top left of that slide. It says discipline, risk management, superior execution. How many of you have started making money, a lot of money on a trade, and you're like, yeah. So many of you have bumped into me when I give speeches like, oh, Whiz, I'm in this Google trade. It's up 150%. I'm like, that's great. Get out. Huh? Well, pigs get slaughtered. So do hogs. Why are you still in it? Well, I think it's going to make more money. And then 2 days later, Google implodes, and they took a 150% winning trade into a 100% losing trade. Mid-course guidance, and then finally the exit plan. When am I getting out of this trade before it goes against me? Let me ask you a quick question. Let me show you a picture real quick, and then we're going to pull up my trading platform. When did this trade your Apple Bear call spread on 8 made money? It did, trader. When did this guy right here? Everybody look at this picture. When did he decide? That's a Canadian F-18 pilot. You see this left engine, his port engine? It failed. He was at 200 feet with his nose parked up in the air doing an air show practice. You could have passed him on the runway in a car underneath him in your car doing 85 miles an hour. You see that engine is still working. You can Google this and watch it on YouTube. It's an incredible video because it happens in the blink of an eye. When did that pilot make that decision to eject? That's exactly right. A couple people answered it right. He made this decision to eject in the brief before he ever got airborne. That's when he decided to get out of the airplane. Many of you think of this F-18 as a trade. You know when you decide to get out of it? Too late, and you're dead. Okay? That's exactly right. So, trading today's market. Here's an acronym I want you to write down. Where is it? Right here. To fear 2016. T. Write this down, folks. T. Terrorism. O. Oil. F. Fed. E. Europe. A. Asia. And R. Russia. I have positions in each one of these areas. You have a position in terrorism, Whiz? No, I'm actually short terrorism, but meaning I have hedges in my portfolio, like that ejection seat in that CF-18 pilot, in case this market decides to go south. So enough PowerPoint slides. Can't stand them. We need to look at some trading here. So this portfolio is the primary live trade brief model portfolio. Like I said, first of all, men lie, numbers don't. So let's look at the numbers. And I showed you, everybody always shows you the top of the screen. We do have losing trades, folks. Oh my God, gasp, I'm going to faint. I can't, I don't want to go to TGO. If you go to any presentation where all they talk about is their winning trades, do me a favor and run as fast as you can and leave that webinar. China, Morgan Stanley, AIG. These trades are long-term trades, some of them out to January of 2018. So I fully expect them to turn around and be profitable. I couldn't be more long-term bullish on China. I hate saying that as a naval aviator who sailed past disputed land masses and saw some, it's going to get ugly with China soon, folks, because our current Manchurian candidate-in-chief didn't do anything about the South China Seas. But I like to tell TGO traders that I have two suits. I have a flight suit, and I'm going to give you my opinion about it, and then I put on my Gordon Gekko Wall Street suit, and I don't care. Okay, my number one mission objective is to make money, and if being long China is going to make me money, then that's what we're going to do. Real quick review of the positions in our model portfolio. In this one, I'm not going to have time to show you the other 2 or 3 model portfolios. Excuse me. But look at these. Like for example, look at the year-to-date market gain on this Brazil trade. 1,100%. Isn't that absolutely incredible? GLD 134%. But real quick, and we could talk about when you join next week in our live trade briefs about whether I'd be long-term bullish on Brazil right now or not. Apple, AIG, Japan, Brazil, China, gold, Morgan Stanley, Nike, Russia, energy, the financial sector, the technology sector, and the consumer discretionary sector. If you want to look at a hedged model portfolio, folks, look at $8,800 in our 2 technology trades, one out to Jan 17, one out to Jan 18. The only thing missing in this portfolio right now, folks, is that Canadian F-18 pilot, what he's sitting on. Tuesday mornings at 9 a.m. Eastern, I do a primary live trade brief. That's this portfolio for an hour and a half to 2 hours. I have got to put on an ejection seat. Why? Let's get into it. Quick strategic brief. First of all, a picture's worth 1,000 words. Here's the Brexit, and we nailed the Brexit, folks. I told my traders, in a week, we're not even going to know what that word means. It'll be a distant memory. I was wrong. No, you weren't, Whiz. You were right. No, I was wrong by a week. It took like 3 or 4 days to get over the Brexit. So I was wrong on the time, but right on the direction. I said we'd chop above the 50-day and then make a decision. And we did. We went up. This is Mount Everest, folks, and we're getting hypoxic up here. There's no oxygen. We've been up here long enough to take our pictures, and we need to get back to base camp. I need to put a hedge in my portfolio Tuesday morning. If you sign up, you're gonna get an injection seat to put in your portfolio. Okay. I don't want to do that one today because, to be honest with you, in these type of webinars, a lot of people look at a hedge as boring. A guy like me, an F-18 pilot, an options trader, all these other bullish and this and it's all crap if your portfolio implodes and you don't have an ejection seat that's making money. Okay. But today I want to talk about Facebook in a couple minutes. What happened? What's going on? Let me do step 1 of our trade plan. My current strategic mindset is moderately bearish. What does that mean? I don't think we're going to implode down to the 50-day here. We had a temper tantrum on Friday, mainly because of this. Where is it? Will Yellen shock today? This was Friday. On Thursday, the Wall Street Journal, I had an article up here that I briefed my traders on. They were like, hey, what to look for in Janet's dovish comments. And the inmates started to try and push the doctor around. We're the inmates, folks, the market. We're high on the Fed's hope. I call it, maybe not a doctor. Let's use the bartender analogy. She's a bartender. So is Ben Bernanke. Quantitative easing, low interest rates. It's the Fed's hopium. I call it the hopium. We're smoking hopium with the Fed. And when she said Friday that it's looking like September, we're going to have a rate hike, what happened? That's like her standing on the bar with a shotgun yelling, last call. We get pissed. Yes, I do. You do absolutely be hedged on the SPY, SPX, whatever you want. And it didn't help that a couple of her bumbling lieutenants, Fisher, what was the other guy's name? Not Dudley, kind of muddied her message. And then one of them had to come out and clear her message, like, no, we're looking for maybe a September increase. Oh boy. Now, here's two things that I think are going to bring this. There's only going to be two things that bring this market down. Bad earnings? Nope. Terrorism? Nope. Everything that could potentially have destroyed this market hasn't put a dent in it. Two things are going to bring this market to its knees. Oil, like it did in January and February, and lack of faith in central bankers, lack of faith in Janet. If that happens, we're going to implode, okay? And it's going to be ugly. It's going to be ugly for a lot of folks like you on this webinar who aren't hedged. I love trading options. Why? I printed money with hedges as this thing imploded. Once I saw the market say, you know what, that was stupid, we can shuck and jive. I don't care which way the market goes, folks. Up, down, sideways, I'm gonna potentially make money. I'm going to show you a weekly options trade that I'm probably going to place Monday afternoon with my members live at 1 o'clock. That's when our weekly option sessions are. And it's on Facebook. I usually trade SPX almost every week as a weekly options. SPX is the S&P 500. I don't trade SPY. There's a difference in tax treatment between the SPX and the SPY, folks. Google it. I'm not your tax attorney or your accountant, so I'm not going to give you advice. I just saved you about 30 to 40% for the rest of your trading career if you trade SPX, and I'll split it with you. You can mail it to me. Step one, strategic mindset on Facebook. Very nice climb here post-Brexit. Earnings weren't that bad, but the forecast was kind of high. Earnings to me, folks, is like a slap in the face. Not that I know how getting slapped in the face feels like that much, but after earnings, the market kind of rubs its face and looks at a stock and goes, okay, now what? Here was a nice run. Earnings, smack. We've been moving sideways, and for the past month, we've been doing iron condors on Facebook weekly, and I think we've seen nearly $15,000 in gains. Now, there's a nice channel there at the 122, 126-ish range. So let's go out to next Friday. Let's hop in our time machine, September 2nd, September morn. The 122. I click create spread. This is I help build options house, folks. This was Trade Monster. I help build options house, like I told you, on at Peak 6. So I love this platform. You can trade with whoever you want to trade with here when you become a TGO member. We have people on every type of platform. I can get you a reduced commission and 60 days of commission-free trading at OH Options House. So we can talk about that when you subscribe. You know what? Let's move this out a little bit to 127, 128. And this is good because look at Facebook on Friday. It was up 1%. Gave 4 cents back after hours, but guess what? When you got a stock swimming upstream against what happened on Friday, I think the market turns around a little bit here, folks. This isn't it. I think just like the Brexit, it's priced in. The Fed raising interest rates is priced in. It's almost like all the guys, I'm also the chief development officer of a hedge fund. I don't brief you on that since it's a private offering and I'm not allowed to really, quote, advertise for it. But let's just say I talked to a lot of people, a lot of, quote, smart money out there, and everybody feels the same way. It's like, just get the damn rate hike out of the way so we can get airborne again. So I don't think Friday was the big one, and you saw the market actually recover from that. I call it the Fred Sanford, right? I'm coming, Elizabeth. That's a big one. Let me put. I'll explain this trade in a second. Let me just make sure I had this written down. I hadn't looked at it since yesterday afternoon. After the, oops, I didn't mean that many little contracts. Maybe 125. And you'll see all good questions. Let me get my trade set here. Now about 75. So I want to make sure I'm within my risk parameters. That's pretty close. Okay. Ladies and gentlemen, this tactic, it ain't a strategy. We're already up to step 4. The tactic is called an iron condor. Since football, Eagles are on tonight, EAGLAS. I call this a football trade. You see the uprights here? An iron condor is a range-bound trade. You see the blue line? That's Facebook, and I want it to split between the uprights. Okay? Even Charlie Brown isn't this unlucky. You want this football to go and stay between the uprights. The football can't split mid-flight, and you can't lose on both trades. I'm going to show you over here. Okay? So for the bull put spread, the left upright, which is me saying, hey, I don't think Facebook's going below a certain price, I'm going to sell 75. Why 75? Give me 1 minute. Of next Friday's 122 puts. That's me saying I don't think Facebook's below 122 by next Friday. All right, smart guy, what if it is? What if you're wrong and the market does implode? Well, I'm going to buy 75 of the 121 put. So if Mark Zuckerberg, on next Wednesday hops in his private jet full of absolutely every dollar and nickel and penny of Facebook and he escapes to an island and the stock goes to zero, our losses are, this is our tourniquet. This is where our losses are stopped out, the 121. This is called a bull put spread. Okay, it's also called a credit spread because why? I'm bringing in a little scratch to do it. Now, let's talk about the right upright. I'm going to sell, same amount of contracts, same expiration, the 127 calls. Why the 127s? 126 recently has been if you looked on the chart and got a good look at it, it's kind of been resistance. I'm giving myself a dollar to the top of breathing room. What if you're wrong, Whiz, and it has a rip your face off rally? Zuckerberg on Thursday claims he invented a time machine and is selling it for $1 trillion, and the stock pops. Well, I'm hedged to the top by buying these 128 calls. This is also a credit spread. So both of these credit spreads together, right there, a credit of 21 cents. I'm going to click Create Order. I'll answer all your questions in a little bit here, guys. Very good questions. Love them. And it shows that we have the type of folks who belong here at TGO. Oops, 1 second. I didn't do, I need to crack my own knuckles. I'm going to click this Analyze button. You see that right there? When I click that button, I'm going to turn into a Catholic nun. I know that sounds gross. You didn't need that visual. But if you don't look where I tell you to look, I'm gonna crack your knuckles with a ruler. Yes, that has happened to me. I grew up in Catholic schools. It sounds like a couple of people have as well. Here we go. You ready? Look at the sad face right there. Max potential loss, $5,900. Why the hell did you make me look there first, man? Because I'm going to break you from being a retail trader. Retail traders, click that button and look right here at Mr. Happy first. John and Pete Najarian, you guys have seen them on CNBC. For years, I've told them when they ran this place, I'm like, guys, you got to swap these two. You know as well as I do, this is the first thing we all look at. They're like, marketing, Whiz, blah, blah, that's we'll lose commissions in trading. I'm like, wow, okay. Why did I not look here first? Whiz, I want to make $1,600 by next Friday. $1,600 a week for 52 weeks? Damn, yeah. Because if you're not okay with that, with losing that, why would you? If you're not okay with that, one of two things happens right now. You don't do the trade, or look up here. You don't do 75 contracts. I can't stress this enough. Sometimes people are like, oh, Wiz, I want to join, but I don't have 100 grand. I'm like, you're not going to be a good options trader because you don't get math. If Wiz is doing 75 contracts because of his $100,000 amount of portfolio, maybe I should do 5. It's why this number right here? Folks, just like the military, I have what I call SOPs, standard operating procedures, in my portfolios. In this portfolio, wait for it, I don't want to risk more than 5%, $5,000 on any individual trade. Why 5%? Why not? I've been doing this for 26 years, a quarter of a century. Oh my God. That's my number. I have TGO folks that are like, Wiz, I don't want to risk more than 2.5%. Wiz, I'm a 1%er. Wiz, I'm a 10%er. God bless you. You have to come up. I'm going to teach you, as you watch over my shoulder, trade these portfolios, how to come up with your own SOP. Wiz, I can't risk 6 grand. What do you want to risk? $1,500, $1,000. Then do 12 contracts, whatever that works out for you. Give me a vertical head nod. Everybody understand that? I drop anchor here sometimes because I want to make sure people understand. I'm not going to join Top Gun Options. I don't have 6 grand to risk. A lot of people don't. So now, all right, Wiz. Well, you're breaking your own SOP. You don't want to risk more than 5 grand on any one trade. It's $5,900. Yep, that's called being the commanding officer. The commanding officer signs the SOP in the Navy, in the squadron, and he or she can break it. You also can break it if you have a damn good reason. And my damn good reason is because I've been trading Facebook for years and doing weekly on Facebook for years, and I know it. Can it come out of the blue Thursday with an announcement and make me lose 6 grand? Yep. Real quick story, folks. When was it? 9 months ago? A year ago? I don't remember, but I hate it. We put on a Google, G-O-O-G-L, Iron Condor on a Monday afternoon in our live trade brief. Literally at 3:50, I manage all my portfolios. I go to the gym. I'm on the treadmill. I do watch Comedy Central, folks, mainly for the comedy, but literally at 4:07 on the dot. Breaking news: Google has announced a name change to Alphabet. Stock's up 5.7% after hours. Back to you. I'm like, oh my God. My immediate reaction wasn't of anger because I've been doing this too long. Many of you would be like, oh my God, I just lost 5 grand. I'm not. I just laugh because I know that can happen. Thankfully, it happens a hell of a lot less than not. And that's why you don't trade weekly options as well on stocks you don't know. I trade about 4 or 5 symbols in our weekly options model portfolio. One member wrote me like a year ago. He's like, Wiz, this is boring. You trade the same 5. I'm like, what are you, an idiot? Do you want me to just pick a stock out of thin air and trade weekly out? That's walking up to the table in Vegas, putting all your chips down and going, all right, go ahead. Wiz is a card counter. Maybe I was, maybe I wasn't. Maybe I still do, maybe I don't. I walk up to the table, stand behind everybody, and I watch the deck. I watch the flow, I do the math in my head, and when the time is right, Wiz sits down and puts his chips down. And he also potentially gets thrown out of places. Now, max potential profit is $1,600. And look at here. This is our Charlie Brown area. Kind of looks like Charlie Brown, to be honest with you. The left upright has its own break even, and so does the right. It makes sense, doesn't it? Because it's 2 separate trades. There would be 2 break evens on this thing. And using at the money volatility, there's a 63% probability of at least making some scratch. Okay? Another reason why I like iron condors. Let's take a look at this over here. This is our time machine. Let's take a look at theta. And if 100 of you just fell out of your chair because it was like, crap, I knew I was going to mention the Greeks. I'm an idiot when it comes to a lot of this stuff, folks. Trust me. I know enough, just like the F-18. I knew how the flight system worked, the flight controls, and all the black boxes underneath me. I didn't need to know what the hell the 1s and 0s and trons firing and the mouse eats the cheese and the rocket fires. I didn't need to know any of that. But for this, theta. If you don't speak Greek, which I don't, how about English? What's theta? It's time decay. This trade likes time passing. So let's Monday afternoon when you're in my live trade brief at 1 p.m. And I don't know if I'm going to place this, folks. It depends on what happens Monday morning, obviously. Let me get that out there. The world could end tonight. Who knows? So Monday afternoon, if I place this trade, everybody keep their eyes right here. I'm going to hop in my time machine. You ready? And you guys watch down there. What's going on? I am making money. Isn't that incredible that we can have a trade on that makes money if the stock doesn't do anything? I have a saying, unched on the day equals time decay, meaning unchanged on the day equals time decay. If I place this trade and Monday, Tuesday, Wednesday, Facebook just kind of wallows around up and down 50 cents, we're making money. You want to be the car dealer, folks. I'm coming to you from a beautiful Fort Lauderdale, overlooking the beach. Right down the street is the Ferrari dealership. Who do you want to be? When the guy in the midlife crisis starts the engine, peels out of the parking lot, what's happened to that Ferrari? Exactly, it went down in value. What happened to me as a car dealer? I went up in value. Let's say halfway down the block, he talks to his significant other, and he or she, because I'll be gender neutral, shoot me, does my Whiz, my significant other, said my midlife crisis is over. It lasted 15 minutes. Can you buy this car back? I bought it for $250. You'll buy it back for $250, right? That's when I laugh so hard that I have a heart attack. I'll buy it back for about 150 grand. That's theta. That's time decay. Don't ever trade, and I'll teach you all this when you sign up. We don't trade debit spreads on weeklies, ever. Unless you think that something's really, really, really big is going to happen, you lose money with debit spreads in weeklies in the blink of an eye. If you know something, hey, I heard at the water cooler that, such and such earnings and this and that, well, good on you. Trade a debit spread, but we just won't. We don't do that here. Couple good questions. The Sajid, I lost quite a bit trading call options, only 10 contracts. That's Sajid, you weren't at Top Gun Options. That's your problem. Is there less theta value in this low volatility environment? Paul, absolutely. Paul McHale, not a guy from the soup. No, Joel McHale. Let me go to VIX. Let's take a look at, it's a very good question. The volatility index, it's our, I hate when people call it the fear gauge, but that's what retail traders know it as. Write this sentence down. Write it down, folks. When vol is cheap, you buy it. When vol is expensive, you sell it. I will teach you how to trade volatility. Trade the VXX. Have a hedge on. Know that the VIX isn't a stock. It doesn't go up like that. Like, hey, Bank of America looking good. No, it doesn't have a climb schedule, folks. It's got again, I'm here in South Florida. It's pitch black out over the ocean. That's not the time for me to run down to Julio's hurricane insurance. He'll give it to me. It'll be $90,000. The best time to do it is a day like today where it's beautiful and clearing $1 million. So this is a low volatility environment. For everything that's going on in the world right now, this is stupid. I told my trader, whenever you see a 1, an 11, or a 12 in front of this decimal point, get long vol. It's at its resting heart rate. Look at this. The VIX went from what, like 14 to 26 in the Brexit. We're going to have another something that comes up. What? I'm not Nostradamus, folks. I don't know. It's going to be something, and you need a hedge. In my other 3 portfolios, we have hedges. The one, I'm embarrassed I picked the wrong one that doesn't have a hedge in it. Nice job, Whiz. But I will fix that on Tuesday. So, how to trade options expecting big news and acquisition. HH, that's a great question, and what you're going to do is you're going to join us here at TGO, because I'm going to teach, teach you that. Real quick, and then I'll take some questions. I'm not a big Uber testimonial guy, but here's a lot of testimonials from folks in our last, it's called Full Throttle course, and it's just been absolutely phenomenal. These are real human beings. This isn't me sitting here with a PowerPoint. John, I would like to thank you, Whiz. Thanks to TGO and your mentoring. I've netted over 15K this month. Okay, I just signed it in May and made the money back within 6 weeks after signing up, and I didn't even do a real trade for the first 3 weeks because I was scared. No, that should say smart, and didn't fully understand the course. Plus, I only started with less than $5,000 and could only do about 25% of the trades. Whiz, I've only been a member for 2 weeks, and I'm up $8,200 in closed trades. Facebook, SPX, and Amazon. Hint, hint. I like to trade those. Following your trades. So, folks, trading is a form of combat. Let me just take you over to where we are right now, because I know Renee and the folks at Investor Inspiration might, I want to get them back on their flight schedule, because I am a guy that if Renee says, Whiz, you have 45 minutes, it's not 46 and it's not 44. Here's where I need you to go right now. Head to go.topgunoptions.com/FT-now. What the hell does that mean? Full throttle is FT-now. There's 3 tracks you can do here at TGO, and Renee will throw that in the chat box, or I can do it real quick. I forget how to do that. And all good questions, folks. Looks like we have a lot of solid potential options traders in here who would do well at TGO. One of those testimonials I didn't show you was I've been trading options for over 25 years professionally. He was a financial advisor. He's like, I was absolutely lost until I got here. There's 3, you can either do annually or monthly subscriptions. And the defensive track means this. You get everything we do here in 8-week course, primary, urgent alerts, advanced. The defensive track, why is it called defensive? Because you trade, you also get access to that accelerated retirement portfolio, which I'm embarrassed to say is only up, what was it, 55, 43%, 40, I don't know. I'll bet the couple hundred people in this room right now would give their right arm to have their retirement account up 50% or whatever it was. The offensive track, you know what, Whiz? I'm a little bit more eager. Well, guess what? When you do the offensive track, you get weekly options. Every Monday we meet, and like I said, knock on wood, the past month and a half we've crushed it. Over $25,000 in gains, and I'm only risking, as I just showed you, $5,000 per trade. Sometimes it's a little less, 45 or 4 grand. Sometimes it's a little more. I just showed you one at 5,900 that I would still do, but it's right in the ballpark. Now, most folks when they do they come to TGO, they do what's called max afterburner. You do AR, accelerated retirement, and weekly options, in addition to everything else we do. So on this page, you can read about everything we do here, what offensive track really means, which I just told you, defensive, what it means. Here's the schedule of the course you're going to get access to. I think we're going to do it every Tuesday night. Tuesday and Thursday, I think, our volatility arbitrage trader, Doug Robertson, teaches it. And it's going to be Tuesdays and Thursdays. Understanding the Greeks, trading methodology, vertical spreads, condors, iron condors, exits, adjustments. It's a phenomenal course, and it's industry acclaimed. Okay, we've been doing this for 6 years, and a lot of folks have come and gone during that time in this space. We stay because of our honesty, our integrity, our incredible customer service. That's our senior client advisor. Her name is Annie Santos. She's beautiful, breathtaking, and she's where I get my Brazilian intelligence from and my American stupidity. If you have any questions, concerns about the packages or anything like that, you can give her a call, 754-300-1084, or you can just shoot an email, support@topgunoptions.com. For example, last time I gave a speech recently, somebody was like, hey, I just want a year of weekly options. Can I do that? She'll be the one that can hook you up with that. But these are it's obviously cheaper to do an annual subscription with us, but these are the monthlies. A lot of folks, when they're putting the foot in the door here at TGO, they do a couple months, 2-3 months, and then give us a call and say, hey, can I upgrade into an annual? I believe you guys, and I'm making a boatload of money. Or at month 1, 2, or 3, I'm bailing out because you guys suck, which is let me put my attorney hat on, which is a distinct possibility, folks. There's ups and downs in the market, but the way we hedge, the way we trade, the way we do our strategic, operational, tactical mindset here at TGO, as you can see by the returns that we have, it's most likely not likely. Okay. Again, I don't want to take up and eat into anybody else's time because I know Investor Inspiration does a great job getting 500-pound heads to give you all some free great content. I don't know how I slipped in with my 50-pound head, but I want to thank Reed and Renee at Investor Inspiration for having me. Go.topgunoptions.com/FT full throttle -now.